All right, we are live, and it is time to go over this semi-bloodbath that we saw in the stock market today. We had the S&P 500 down 0.8%. We had the NASDAQ 100, it was down 0.8%, and then the Russell 2000 doubled that at negative 1.6%. Also had the VIX spiking quite a bit, VIX being up about 8% on the day, so it's back into the 15s. If you just remember about a week or two ago, it was just in the 12s. So it's starting to pop up a little bit there. Let's talk about whether or not that move can be trusted or whether or not we're going to see another push to the downside. Main purpose of this video is to go through the sectors, to go through the overall market using my top-down trading strategy, and we're going to try to figure out where are the opportunities in this market going forward. What stocks, what ETFs should we be looking at as opportunities to the long side in the days ahead, should this market be done with the sell-off after just one day? And obviously, we've seen a lot of one-day sell-offs that obviously get bounced right back up to the previous highs, and we just keep pushing higher. We've seen that a lot, particularly with big tech. But if that's going to continue here, we want to be prepared for the potential to play the bounce. On the other hand, if this market continues to sell off in the near term, we don't want to necessarily be adding new positions just for the sake of it. So we want to make sure that our timing's right, that we're not just forcing positions on the market only to take on unnecessary losses. So with that being said, make sure that you're posting your questions in the comments down below. I'm going to look at them. I'll see them, and I will answer all of them as I get to each and every one of them. So if you have a question about a stock or the market as a whole, post them. I'd love to go over them with you. And once I get done with all my stuff, I'll get to those as well. Let's see here. First off, let's look at the S&P 500 here. So we're going to go the S&P, get that little picture-in-picture action going there. S&P, the big topic of conversation here on the SPY is whether or not we have a double top pattern in place. So you have this first top, you have the second top, and then you had the push through today. Now, we closed this gap right here, and so it's really of no more importance for us because we got this gap filled, so we don't even have to keep that box there. But you also have this bearish island reversal candle. So it's essentially when the market gaps higher and then it forms like a cluster over a few days of candles and then gaps back down to the downside. And that's what you got, where it's essentially this gap here is sharing the same gap right here. So in some ways, while we filled this gap, you still have parts of that gap still open from the gap down today because it never actually had price go inside of that gap. So double top pattern is still developing, but it's not confirmed yet. In order for it to confirm, it would need to break below the lows from June 26th. That's what you want to be watching for. And in conjunction with that June 26th lows, you also have this massive support level. That's this tan line that's going all the way across. That's a key support line. And you have this rising trend line off of the March lows. Those two are getting really close to each other. That'll provide additional layer of support. So if this double top pattern is going to confirm, more than likely it's going to have to break through this trend line in conjunction with that support level. That's on the SPY. And also on the SPY, we've been seeing a lot of low volume readings of late. Today, we actually had a slightly above average volume reading. So above average meaning that our typical day right now over the last month has been 79 million shares, 79 million shares traded, and we came in at 80 flat. So pretty good volume reading today for the sake of what we've seen back on yesterday and on Monday. Very, very low readings. Looking at all of that, now let's look at the Qs. On the Qs, you had the bull flag breakout, you had the gap higher, you filled this gap today, so you don't have the bearish island reversal candle necessarily, but what you do have is just kind of a meandering index here where, yeah, it may be trying to form this double top pattern here that I just highlighted on SPY, and the same thing could be said about the Qs. But, you know, with SPY, there's a support level that you could see it bouncing off of or a trend line bouncing off of. I don't see it as much with the Qs here because on the Qs, you have the 20-day moving average, and that's really about it. Yes, there's some support right here, but I don't know how strong that support's going to be. This rising trend line is pretty decent, but it's at a pretty steep angle. So I don't know if it got down to this level, if this trend line here would already be, way past, way above it already. So the Q's still kind of like meandering a little bit there. I don't have a strong sense of where it wants to go because essentially since the middle of June, we've been trading sideways on the Qs. Yes, there's been some pretty good days to the upside, but overall, it's been a sideways day. And this was the biggest day for the S&P 500 to the downside since, I think, May 23rd. So pretty when you really look at it over the last month and a half, a pretty decent amount of selling that took place today. On IWM, and this is probably the most interesting one, yes, you also have a double top on this one as well. This is your first top here. This is your second top. But the extent of the selling was much more noticeable. So you have this breakout level here. This is this orange line going across. That's your base pattern here. It had a really nice basing pattern, broke out, pulled back, bounced again. Now we're pulling back to it again. Now I'm long. I was long on IWM coming in today. I think it was Monday that I took about a third off of it for about 3%, I want to say. And then today I went ahead and took another third off just because I wanted to essentially curb my risk on the trade. So we do have a gap to the upside that needs to probably get filled sooner rather than later. Support at the 200-day moving average. That's this white line here that I'm hovering over. So there's definitely some support underneath. You can see where price bounced off of the 200-day moving average as well. So the key here is, can it continue to bounce off of this level here to the upside? If it breaks, that would be a big red flag there. And we're going to talk more about why is the Russell 2000 underperforming the NASDAQ and the S&P so much. And the secret lies with the FANG stocks. And the reason for that is when you look at this chart here, what do you notice? Technology sector up 32% on the year. You have discretionary stocks up 18%. You have industrials up 11%. Those are the only three sectors that are in double digits this year. The only one. And I think the S&P 500 is well over like 12 or 13% so far on the year. So these are the only three, and industrials pretty much is just performing in line with the S&P 500. But then you get down to the rest of the stocks. This is the next eight of 11 sectors are grossly underperforming the overall market. That's your materials, your real estate, your healthcare, your staples, your communications, your financials, your utilities, and your energy plays. They're all underperforming the market as a whole. And that's not a good thing. This is not a healthy market. There's not a lot of leadership taking this market higher. You're not seeing where, okay, we got 7 or 8 out of the 11 sectors trading to the upside, beating the market or in line with the market. No, you got 8 out of 11 sectors grossly underperforming the overall market, like half of what the market's actually doing. And in the case of utilities and energy, they're actually still in the red on the year. And that's one of the reasons why energy had been setting up in recent days, but I never took the trade. One, because it didn't break out. Two, it's the worst sector to be trading right now. So that's that chart right there. I wanted to show that to you because it gives you some perspective on this market when you see just how much technology is outperforming the rest of the market. And big hello to Alpha Oscar. Yes, I will get on to OXY here in just a little bit here, and that'll be talking about the energy plays as well. But what I want to do here is go through all these charts here first, and then I'll get to the questions after that. Like I said, pretty rough day, pretty ugly day for the market, the worst one since late May. For me, it was a crappy day. I mean, I had some long positions. None of them did well. I mean, some of them did a little bit better than others, but overall, it wasn't that great of a day. All 11 sectors were red, but you had 2 FANG stocks. That would be Microsoft and Apple. The best 2 stocks that you could possibly have in the green today were in the green for the sake of the overall market. That they were Apple and you had Microsoft. So Apple was up 0.25%. Doesn't sound like much. And then you had Microsoft up almost a full percent. Again, 1%, not bad. However, those 2 stocks represent $5.5 trillion in market cap. And so when those are up, the NASDAQ's going to have a much more difficult time selling off. I would be willing to say if Microsoft and Apple were both down 1.5% today, which is what a lot of your tech stocks were down, the overall S&P 500 and your NASDAQ, they would have been down well over 2% today, well over 2%. So going back to IWM, you have this weakness where it looks like it's never really bounced like the rest of the market, and it hasn't. And that's because it doesn't have that influence from the FANG stocks. And so it's struggling. Your real picture of the overall market is really found in the small caps because everything else is just being unbelievably held up by your Apple, Amazon, Microsoft, Google, NVIDIA, Tesla. Let's see, what did I forgot some others, but Meta, that was the other one. But overall, those are all struggling. So Which sectors should we look at going forward? We talked a lot about the past. We talked a lot about today. What are we looking at going into tomorrow, the next week ahead? What stocks should we be watching? And I got a handful of those that we need to be looking at as well. So let's go ahead and get into that first. Looking at how the overall sectors did, I'm going to use the spider sector ETFs. These are really good if you're just wanting to be able to track all the different sectors out there. There's 11 of them. I would highly suggest take a screen grab of this and try to make sure that you are following each of these sectors. The first one, staples, not bad, but what are we seeing still out of staples? A sideways price action. I just don't get a feel that there is an edge there to be traded with staples. So I haven't really traded much of that. You got technology, kind of like the Qs. It's trading sideways. I don't think it's a bad thing to trade technology right now, but you got to realize it is well extended above this rising channel. It really just went ape back in mid-May. So there is the potential for some downside here. Particularly, it could come back down to 161. So that's like a $10 drop on XLK. That would be significant. And it would take out a lot of, cause some short-term pain for a lot of particular tech stocks. So keep that in mind if you're trading XLK. Do I think it looks okay? Yeah, it looks okay right now, but it doesn't mean that there isn't some much more risk associated with it from a reward risk standpoint. I don't know if the reward is as great as in, say, industrials or real estate. And speaking of real estate, that brings me to the next chart. Why do I like real estate? Look at this little breakout that's trying to unfold. Did pretty good today, only down 0.5% compared to the S&P and the NASDAQ down 0.8%, small caps down 1.6%. This one held in there pretty good. It's holding that 200-day moving average, broke out nicely. It was due for a pullback of some sort, so we got that moving. So far we have tech, we have real estate that we're kind of liking here. The next one, materials. I was enjoying this one last week. I thought, okay, there was some potential there. It broke out, got the follow through, looks really good. But yesterday and today was an absolute bloodbath for materials. And so we see materials go from just on Monday, going from 83.18 all the way down to 79. That is a significant pullback for a sector. So right now, I don't want anything to do with materials because that looks like a big fake breakout to me. And then industrials, I still think industrials looks pretty good. It still has this breakout in play. This is a long-term breakout too, by the way. So I still like industrials a lot. You're going to find that there's still a lot of plays there. Communications, still got a rising uptrend short term and a little bit further back going into late December, still intact. So I do think that kind of like tech, kind of an okay sector still. Healthcare, I wouldn't really touch it right now. It tried to break out a couple of times. It faked you out. I still see that as in a downtrend as well. Financials got close to breaking out, couldn't do it. This is XLF. Tried to get really close to breaking out. In fact, it did intraday, and then it completely gave it up. So you got to wait and see on that one for a little while longer. Utilities, but some potential there if you can get it at 64, but I would just be playing the bounce off of this big support level right here. Then with discretionary, still rising uptrend, still intact. I mean, I think it looks pretty good still. I mean, right there, trend line still intact in the short term, going back to late May. This bull flag still playing out. Energy is the one that you want to be careful of because this layer of support right here continues to get breached on a closing basis, on an intraday basis. And then it just, I don't know, even to the downside, I don't necessarily think there's a lot of conviction. I think there's a lot of confusion in this chart. So coming up to Alpha Oscar's chart here, he was asking about OXY. And I think this is a good place to probably talk about, scoop my head up a little bit, about OXY here. So like energy, and I haven't really looked at this one too much recently, but you have a big support level right here that goes back all the way to, I want to say about September of last year. That's a big support level. I think this support level can go away. I think this downtrend still remains intact right there. So it's essentially a triangle, very similar to energy sector, right? We've got a triangle there, different time frames, but nonetheless, price action is getting narrower and more consolidated. So with Oxy, you want to be very concerned. If this breaks through this $56 level, then you have what's potentially a big topping pattern here. And if you zoom out far enough, you can see where there's a lot of potential for that to be a topping pattern. To the upside, you need to see energy break to the upside, break its declining trend line, and Oxy needs to break this one too, because right now it's just trading sideways. It's trading sideways in a very violent method. I mean, it can go from 56 all the way up to 60. That's pretty significant. And you can also have some pretty big downturns as well when it tests the extremes of this range from 66 all the way down to 56. So stop losses are important, but you got to wait for it to break out in order to avoid that unnecessary loss, or for the breakdown to in order to short it. So good stuff there. Yes. So Zach's asking about some defense stocks. If you're talking about more of like your industrial, like your Northrop Grumman, LMTs, we're going to get to some of those here in just a second. So that's a good point there. So let's look at some of them here. So we talked about XLK. What are some of the stocks in the tech sector that I could be looking at? There's not a lot of them there right now, but one of them that I would look at, CRM. I really like this triangle pattern. It tried to break out yesterday, but with the amount of red that was in the market, nothing really survived. It was down 1.7%, slight break to the upside. I would still give it another chance, especially since you can keep a pretty tight reward risk ratio below 207 for the stop, and the breakout, I'd be waiting for a break of Wednesday's highs to get long on it. But really nice looking chart right there. The second one is SNPS. You got a bull flag pattern here. It seems like it's never going to break out of it. Tried to yesterday, but closed below it. But if it can break out of that bull flag pattern, there's some opportunity there, I think, from a stop loss standpoint, probably below the day's lows today. So if it breaks below that, that gets kind of below some extreme selling that took place today. That would be a good reason to get out of that. And then finally, the next one, NXPI. You had to pull back to this big support level right here. That's pretty nice. Left shoulder, big head right there, right shoulder. Broke out, pull back to this 200 level. I wouldn't mind still seeing it maybe pull back to the 199 level, but I don't think it's absolutely necessary. But if it can bounce, well, it's already bounced, but if it can continue to like push higher going into tomorrow, and you can get some good bullishness out of the broader market, followed by technology and semiconductors, because semiconductors is going to be important. Right now with the semiconductors, what you got to be careful of is this head and shoulders pattern that is formed. It's not so much your technical or your textbook head and shoulders pattern, but you do have a left shoulder, head, and right shoulder. Needs to confirm. If it confirms to the downside, that's where things could get pretty ugly. That's where NXPI could completely fall apart. Looking at real estate, one person asked, let's see, who was that asked? All right. Let's see. Does the real estate align with the home value on Zillow? I'm not sure if I totally understand the question, but Zillow from in relation to the real estate sector, it's kind of a different one because it plays more as a tech play than it does a real estate stock. But if you're looking at Zillow from a bouncing opportunity, I think where it needed to hold that bounce was at 49. Didn't do that, so I think that's a big problem. And then now the next area that it needs to hold, and it's not that it can't bounce here. You take away that support level, you still have a series of higher highs and higher lows. So it's still a pretty good looking chart. It's just taking a pretty good punch on the chin here, going from 53 to 47. It's over a 10% move. So if it can hold this level around 47, 40, late high 46s, I think there's a chance for it to provide some hope for traders. Let's see. Other real estate stuff that I wanted to mention, SBAC. Look at this guy. Got a nice little, so XLRE, we talked about it already, but it's trying to break out. So you start to look for the individual plays, these RIVs. XLRE has some potential here. It broke out, pulled back today, and held this level. So that's promising. That's a good looking chart there. You have some decent volume spikes here as well, especially on a week where the volume hasn't been all that great. It's shown some pretty good promise there. Of course, it did make a pretty good run up. So if it consolidates even for a couple more days, I wouldn't see that as a red flag. It's made a pretty good move from 216 up to 238. I think that's like, what, 10 straight days or 9 straight days of gains there without any kind of red. So cut it a little bit of slack. It got above the breakout level. Now let's see if it can keep that rally going. And then we have INVH. INVH, we can get rid of that little line there, but slightly tilted breakout level to the upside. I'm not as big of a fan of those, but there's not a lot of real estate setups that I really liked at this present time. This is one of them that could flash for us. And even now, I'm just noticing this right here. You almost have like a double bottom breakout right here too. So that actually makes it look a little bit more appealing than initial glance. Yeah, that's really not bad. So you got a left bottom, second bottom, getting close to the breakout level there. I think if it can clear 35, that would be great. Stop loss. You can probably put it below it. I mean, depending on one's risk tolerance, I'd probably be putting it below this level right here and see how it plays out from there. So XLRE, some hope there. Then in the industrials, and this is probably where you have a lot of different ones there. UPS, it's got the whole Teamster strike going on, but this breakout, it's trying to all of its might to try to hold it. It's closing just below it, but nonetheless could still come back into play in the coming days. Maybe give it a couple more days for some of the news headlines to shake itself out and see if it doesn't provide a good opportunity there, because you still have this left shoulder right here, this head, and then you have the right shoulder breakout. It's pretty nice. Then you got Honeywell. I'm still long on this one, 2/3 of a position, but you can see where it's still bouncing off of this rising trend line. That looks pretty good. And then LMT, this is a nice little base that's developing in the defense stock here. And we know how well defense stocks tend to do, especially in a time of war and everything. Basing pattern here going all the way across. I would look probably like 466.83. If it can break above that, you might have a good opportunity there to the long side. That also brings me to ADP. This is your staffing outsourcing. I need to extend this line a little bit further out, but you can see really nice basing pattern right there. So if it gets above, let's say if it gets above like 222.76, some good setup, reward risk trade setup there as well. We are coming up on the second quarter earnings, so we got to be mindful of that we're not holding stocks through earnings. Like you have Netflix coming up pretty soon, you have some of the banks coming up pretty soon. Be mindful of that. Always know your dates for earnings. And finally, we got NOC. NOC has a similar, almost like a cup and handle pattern right here. So these are the defense stocks that that I was wanting to talk about here. Cup and handle right there. Cup, then you got the handle. Hasn't broken out yet. Watch for like 463.81 to get long on that. And that's about it. Those are the ones that I had to go through. Let's look at what, though, before I stop. CMCSA. You have almost like an ascending triangle pattern, but the lower part of that ascending triangle pattern is pretty longer term versus the resistance overhead being shorter term. Above 42 kind of gets the wheels moving on that. And then you also have, what was this last one? EA. And this is a bullish flag pattern right here that's been developing in recent days. Look at that. So if you can break out of that bull flag pattern and maybe get up to that 131.30 level, then you have a breakout to the upside. That could be a nice play, really, too, if you're looking for technology, because it kind of straddles the line between communications and technology. You can see that XLC considers it, the Spiders considers it a communications play, whereas TC2000 aligns it into the tech sector. So let's look at some of your questions here. We talked about the defense stocks from from Zach there. Thank you for doing that. Let's see. We talked about the real estate, Mara and Litecoin. Again, let's see. Mara, a lot of people have been flooding into this one. It's had a pretty good move. It's gone out of that single digits range. This is one of those that, would I chase it at this level? Absolutely not. What I would be looking for more so than anything would be how much risk am I willing to tolerate? Would I be willing to tolerate a move down to 13.50 before I got out of it from 15.30? That'd be $1.80. That'd be a 10% move. Or do I want to keep a tighter leash on it and say, I'm going to get out if it breaks below this 5-day moving average? Because you can see going back to, outside of June 26th, every day since then, it's had done a pretty good job of holding the 5-day moving average into the close. Some intraday breaks, but it holds it into the close. The way that you could be a little bit more looser with the stop loss is if it breaks and closes below the 10-day moving average, or just a really strong move down below the 10-day moving average would be another way to get out of that trade as well. But overall, you can't really chase after something like this because it's already made a move from 11 to 15. That kind of gets outrageous. I mean, the volume's still pretty good, so there is the chance that this thing continues that run higher. It looks like it might be dying off a little bit though, but it's still pretty good. Watch some resistance here at 18.30. That could be one that causes it some trouble. That's really the only. Actually, that could be a big layer of resistance here to watch. Yeah, I would say make sure I'm drawing this. I'm going to pull it up on the weekly just to be able to hit my points a little bit better there. Yeah, on the weekly chart, I would say like around 1715, you're going to want to be really cautious of this resistance here because that is significant resistance. One of the things when you get into one of these big runners like this, it's easy to get caught up into the hype and how much higher. So a lot of people that are long right now, they're up maybe like 15-20% on Mara. They're thinking to themselves, it's going back up to 82. It's going back up to 2021 highs. That's really not what the perspective you want to have, because when you're starting to look at those kinds of targets, you're going to be blindsided by all the stuff that happens in between, if it ever even gets back up to 82. So Merit, that's a good one there. I can pull up some Litecoin. Let's see here. Litecoin chart. So we talked about it last time about this, had a really nice breakout there to the upside. Now it's been on the steady pullback here. So what do we want to look for on this particular pullback? Well, let's see if I can draw that line a little bit tighter there. There we go. So really close. It might actually be bouncing off of it today for the most part, depending on how you draw that trend line. But and the reason why I say that is some people might say, oh, well, you got like a trend line right here and it's already bounced and it's holding it. I'm trying to get as many points as possible. So that's kind of how I would draw it there. It's pulled back pretty close to it. Now you want to see whether or not it can hold that support level. That's going to be the key thing for it. And right here as well, there's some support at like 96, 97 as well to watch. Next question. If I can squeeze in another one, can we have a look at SOFI? Yes, we can look at SOFI. This is one I get a lot of crap for because I've not always been the most bullish person on this stock. I mean, I try to call it as I see it. I said, hey, if it can break through 810, that's a good sign for it. It's really not something that I wanted to chase after making a move from 450 up to 8. I think maybe some of that student loan repayment stuff is probably not as important as it once was in terms of being able to rally the troops. It's pulled back to this 38.2% retracement level on the Fibonacci's, so that's important there. But and so far it's holding it. It's held it on 2 different times, so that's something to keep in mind. And it's also testing the support level right here that goes all the way back to August of last year. So right now, can it hold the support level? I think you can even play it as a bounce play off this level. But I mean, keep in mind, you want to have a tight stop loss on this thing. If it broke below today's lows, I wouldn't want to be in it. I could probably maybe justify the lows of June 23rd. If it breaks below that, I would want to be out of it. So really, it's a bounce play at this point off of support. And I'm not a SOFI hater. I just sometimes people don't like it. They associate a negative outlook on a stock or a negative technical analysis with you're a hater, and it's not true. All right, even Lewis wanted some SOFI action here, so I knocked out 2 birds with 1 stone. But he also wanted to look at AFCG. I can look at that. We're talking about the real estate, so very relevant here. You have this rising trend line. It looks like it's breaking that rising trend line over the past week. Sometimes the technicals on some of these REITs can be really difficult. I'm trying to find support really on this one right here. And I feel like I'm just trying to find it based off of the last 3 days. And I don't want to do that. I mean, in this area right here, there seems to be some like price level support, some volume support, because you got a lot of volume between 1220 and about 1190. So, I mean, if we ended up breaking below 1190, yeah, I mean, I'd probably say that. Essentially, probably if we break below like 1175, I wouldn't want to be in it any longer. But even this rise in trend line, that's a cause for concern. I just don't know I don't know where the support level is on it, and it doesn't look like there's some nearby support. So that's where I would be weary of. So if I was already in this trade, let's say I bought it back in mid-May and I was riding it up and it was doing pretty good, this trend line break would have been enough for me to get out of it. Oh, man, you guys got some comments piling up here. Okay. I was just curious if real estate. Okay, I think we answered that one. Yep. Oh, so I think this question was, do I think real estate is going to align with the real estate sector in terms of rising prices for homes and so forth? Does that necessarily relate to the real estate sector? Not always. I mean, if you look at, some of the housing prices, at least here in Florida, they've held pretty steady, and you can see where real estate is just kind of, real estate sector at least is taking a beating from 2022 to 2023. And you're also now seeing, I think, real estate mortgage rates or mortgage rates, 30-year mortgage rates are at the highest level in 2023 right now. I think they're like 7.22%. It's pretty high. Tesla beat deliveries. Rivian beats as well. Lucid has their numbers soon within the next few days. I know it's almost a penny stock, but any thought on Lucid? So good thing that you brought that up, because I actually had a section that I forgot to cover here today, and I can cover all 4 of those. I have some opinions on them. There's a lot of rage right now about EVs. You had Tesla beat their deliveries, like you were saying, Rivian beat their deliveries as well. So there's a lot of hype about them right now. So when you take something like Rivian, you go after Rivian, you can't. I mean, yeah, there's a lot of volume in it. And it had this nice base breakout, which we've been highlighting some of late. It broke out of that base and it just kept on going. This isn't a line that I drew today. I think this one goes back to one of our previous ones I was talking about. But it broke out, did fantastic. I mean, it's almost like a double going back to really like late June. Do you chase it? You can't, because how are you gonna define where the risk is at this point? Put it below 1763 in case it starts to fill this gap. That's a lot of risk to take on. You're talking like 20+% there. So Rivian can't really do anything with it. Maybe if a bull flags in the near term, if he can, give you a little bull flag price action like that, maybe you could play that and try to play the next leg higher. But right now, you just got to wait on that. Tesla, on the other hand, looks kind of scary to me. Why is that? You have this big gap. We just talked about SPY filling this gap today, right? Tesla has a very similar one with 3 days as well. It just hasn't really snuck into this gap yet. But in the coming days, if we still see continued selling, that gap is going to be, a prime candidate to get filled. And then you also have this gap here as well. And trust me, we've seen Tesla fall apart over the years. So it's no stranger to some heavy sell-offs. That brings us to NIO and LCID. And these are probably the only 2 that have plays currently. Yeah, so NIO, would I go after it? Probably not. Down 6.5% today. I mean, it needs to clear these 2 support levels at 1030. That's about 8% away. That's not in the here and now. But then you got LCID, could possibly be a move here to watch. If it breaks this declining trend line here, you got some above average volume here, made a pretty nice run up off 550. If it can get, maybe like up into like 760s, there's some potential there. It was down 4.5%, but a lot of stocks were down 4.5% today. But yeah, watch this resistance level. That would be the big thing right there. Maybe even watch the 200-day moving average, but I don't think there's as much history with the 200-day. Final one thing that I would want to say is VIX. Looks like I still have some more questions, so I'll get to those as well. The VIX, look at this declining trend line here on the VIX. So it got all the way up, broke above this declining trend line today, and then it closed right below it. Closed right below this big support level or resistance level as well. So does that mean we're just going to see another just absolute obliteration of the VIX? It's possible. It's very possible here, but I mean, we've seen it plenty of times in the past, these kinds of moves here and here and here. Technically, it did not do anything today, the VIX, with that 8% move, 9% move almost. Good to have you here, Lou. Hit on puts, but flip back to bulls. Can't stay bearish too long. Even though the chart on ZM doesn't look too good, I think it's due for a bounce. Calls going into CPI. Let's see what we got here with ZM. Oh, man, that does not look good, man. Yeah, I mean, today's selling, you could see a bounce back on it. It's really a falling knife scenario there. Maybe some support here. I mean, you can see where it's violated the support in the past. So I don't have a high level of faith in it, but maybe that support can hold for you. I'm really trying to paint a positive picture on this one, but I just that's a nasty break of that trend line there. You could even say maybe that's, we got to taking into account this one here. Maybe that's not the trend line here. I mean, I don't see what's wrong with counting this as the trend line, but if you wanted to be absolute about it, you could say that's your rising trend line right there, and it's just stuck in a sideways pattern. It just depends on who ends up being right about that. I'm not sure. Airline stocks have been moving up the last month. Yes, they have. So you take a look at like something like Jets. Finally had a pullback today, and there's a good chance that people will try to flock into those again tomorrow if the market tries to bounce. Also, benefiting from a lot of these travel stocks like RCL, big time move. I mean, it's more than double in like the last month and a half. or I guess I should say probably like the last 2 months, it's doubled. Pretty crazy. TCL, another one going from 850 up to 1886. That's absolutely nuts. There should be a pullback at some point in these. I mean, these are just monstrous moves for these size of companies. But yeah, Jets doesn't look. I mean, phenomenal move over the course of June. But really, what we want to see is, because I mean, I don't want to just buy the dip off of a one-day sell-off. I want to see if there's any actual plays to be had here. JetBlue, you could say JetBlue's got a nice little basing pattern there. Look at that. Breaks above that. I mean, it's down 7% today, so it has a little bit of ways to go before that actually comes to fruition. But these are all the stocks that are in the Jets ETF. Then you got let's see, Boeing. How is this one looking? Boeing. That's all on my not trade list. I don't even want to talk about that. Could get a little triangle action. I don't think that's good though. Dow, Delta, similar like CCL and RCL looks, or even Jets. I mean, it's just straight up driving that whole sector up, or industry up higher. Man, I want to say that maybe there's an opportunity to buy the dip, but I'm just not seeing it, man. LUV. I mean, where do you buy the dip at? After one day? What if it has a bigger pullback? What if we have a 38.2% Fibonacci pullback, which is pretty traditional? Then you're looking at more of a move down to 33 from 37. That's pretty steep. Sam, great to have you here, man. All right, we did some SOFI. Man, we covered some SOFI. Holy cow. I'm glad you guys are interested in that stock, though. A lot of you guys probably are in the stock too, right? Snow, let's see. There's been a lot of talk about it of late. You've had two what I consider fake breakouts right here. That causes a little bit of concern, possibly even a double top right there in the very short term. But if it's going to be playable, it needs to get back above 187. That's a pretty steep move too. I mean, it's almost 10%. It's like 9%. I don't see anything really worth taking advantage of with Snow while it's stuck inside of this range. And let's look at ON. Kind of got his backwards there. Holy cow, I've been marking this thing up. Let's just get a fresh look at this one. Too many lines, man. Horizon trend line still intact. Let's see, we got this channel right there, still intact. It got up to the top end and then it started pushing back a little bit. Not uncommon to see that. Even a trend line within the trend line right there. You could even say that might be this line right here. And then this line right here could almost be forming like a bearish wedge here. So if I was to play ON, what would be really nice is to be able to play it off of the 75 level. That's not in the here now. That's $17 below. So I'm not going to be like, oh, watch that for tomorrow, because that's not going to probably happen. But trying to get into it right here, yeah, maybe it bounces off that trend line. But if it does, then you got the heavy resistance at 97, 98. I'm not a big fan. Would I buy into RIVN right now? No. I mean, I talked about it just a second ago, but just to reiterate, no. Now, that's like us traders, we got to, like see these moves happening early on. I mean, we were talking about this one before in the 15s. I didn't get into it. Don't get me wrong. I didn't buy into it, but yeah, I mean, that base breakout, if that's something that you're wanting to get into, you kind of got to get into it early on right here. This is where, you run a higher risk of some of the big whales starting to sell some of their shares off to you while you're buying it, absorbing their shares that they're selling. You don't want to do that. Yeah, I mean, Zoom, going back to Zoom. Yeah, I mean, it could bounce. I mean, who knows? But I don't see the same as good of a basing pattern, and it fell apart today. For me to even get excited about, it needs to get back above 71. TSN for the long term. Let's look at that, Sam. It's almost like a cup and handle pattern. Usually the handle is not that big and the cup is not that small, but kind of looks like it. Man. So sometimes when it looks like it's trading at the end of a range, I want to look at it from a weekly chart, try to get different perspectives, or even like a monthly chart. You look at it from a monthly chart, definitely some key support levels here that it's testing. I mean, on a monthly level, it has tried to hold this 49.82 level quite a bit. Now, what was it? Back in 2022, it was trading at over 100. So it's seen about a 50% drop. This is one of your more of your staple plays, right? XLP. XLP hasn't really done too much this year when you're looking at it in this range. It hasn't done too much. Now, looking at it from like the monthly range, it's done incredible from 2009 onward. But with TSN, you can see there's been a lot of volatility going back to 2015. So from a long-term perspective, it has had some quite a big, large number of moves and sell-offs. All the while, interestingly enough, it's forming higher highs. So that's kind of cool too. But right now, yeah, I think from a long-term perspective, you could probably play it. I think if it was me playing it from a long-term perspective, I would want to say, all right, below 42.57, I'm out. I wouldn't want to hold it beyond that. That's a 20% stop loss for a long-term play. That could be a little bit steep. If you want it a little bit tighter, then maybe it goes below the lows from May. So 47.11, that would be about a 10% play. So, but yeah, I mean, I think it's oversold from a monthly play. It's in the single digits. It could very well be due for a bounce. I have to watch that from a long-term perspective. Now, from a more short-term perspective, you got this cup and handle pattern here, and it could be ready to break out. So if you get above like 52.73, there's some potential there. Right. If you had one stock to hold for 5 years, what would it be? I don't know yet. I have got some stocks that I'm going to hold for long-term, but if I had to jump into something at this point in time, not sure I could do it. I mean, one of the things that I like to do, and I'll show you something. I like to buy. I don't try to go find like what the next Amazon or what the next Apple is going to be. I think that's a very difficult task. I think people who dedicate their lives to trying to find that kind of stuff on Wall Street don't do it. I remember Kramer, he actually blocked me for this. He said that ZU was the next Amazon, and I don't even know what happened to that company. Honestly, I think it might have got bought out or whatever, or it's the next big competition for it. That was the stock symbol, ZU. Yeah, you don't even know what it is, probably. Neither do I. I don't even remember what it was either, but it's not existent anymore. T2108. So this is the percentage of stocks trading above their 40-day moving average. What I like to do is I like to see these getting into the single digits. I want to see the percentage of stocks trading above their 40-day moving average, like at 4 or 5%. When you see that, under 10% reading, that's usually a good time to start looking at where are some good buying opportunities for long-term plays. And so, for instance, when you started seeing these readings right here back in October, hitting 7.9%, I started adding some plays. I didn't get quite the full positions that I wanted to, but for instance, in AMD, I started buying AMD at around 59. I think that was my average price. I had some lower, had some higher, but that did pretty good. A lot of your tech plays did really good. But long term, I would really, what I would tell anybody that asked me for my opinion on it is, for me, I'm going to wait for it to pull back significantly. I want to see some stocks really take it on the chin from a heavy sell. So if we get that in the second half of 2023 here, that could be a good opportunity to start loading up. And it doesn't have to be these stocks that you never heard of before. They can be your Apples and Amazons and Netflix and Googles. They just need to provide you with the opportunity on the chart, just like NVIDIA did, for instance, right? Back in October, trading at $110. Now it's at $400. Those plays do come up, and that's what you really want to do. Let's see here. Can you share what's your long-term strategy? Smart DCA, stupid DCA, buy in heavy from 50-50. That's really my long-term strategy. I always try to have some cash available for, market sell-offs. I'd like to buy them when things are really extreme, because that really takes a lot of the risk off the table, especially when the T2108 gets around the single digits there. So, a lot of good questions here today. Appreciate it all from you guys. Always love hearing from you guys. Some of you guys wasn't sure if you were going to show up today, but you guys did, and so that was exciting. If you missed the beginning parts of it, I would encourage you to go back and watch some of the beginning parts, because I did talk a lot about different trade setups to be watching in the days ahead. With that being said, check out by clicking down below the join button. If you're watching on YouTube, you can click the join button below and get market videos from me each and every day pertaining to, for just members. pertaining to the watch lists that I'm following, the different trade setups that I come across each day, plus big tech summaries and stock market updates as well. So check that out. I'm tired for some reason here, but glad I got through it here. Thank you guys, and God bless.